Welcome back to Revolut Wealth Manager. I just want to talk through my decision making process when receiving a dividend. So you can see today I've received a dividend of 48 from Duke Energy. I actually was paid a dividend of 56 but there's a withholding tax of 8 because I'm a non-US person paying 30% on dividends. I'll leave that to another video, but that brings the total dividend down to 48 . So just to show you, for Duke Energy, I currently have a holding of $49.10, which is just under a 1% gain since I made the investment. In terms of when I made the investment, I purchased $50 worth of shares on Tuesday the 4th of August at $83.85, and you can see that my holding is around $49.09 and the share price is currently trading at $84.51. The reason why I have less than the $50 initial is that when I made the transaction, I wasn't a metal customer with Revolut, and therefore I was charged a £1 commission here in the UK, which is $1.29. So that's a cost of the trade when I made that trade on the 4th of August. I've subsequently become a metal user and I'm not charged commissions any longer. So what I want to do now is head over to the spreadsheet and just talk you through what I do with both the dividend and the stock holding. I go through a process of review and decide on next steps. I think whenever you receive a dividend from a company, I think it's a really good moment to assess both the stock position, the financial health of the company, and then you can make clear decisions whether you want to stay with the company. But more on the types of decisions when we head over to the spreadsheet now. Okay, so before we get into the spreadsheet, I just want to talk through a website I really like to use when analysing stocks, especially before I purchase an initial investment, and also when a dividend is received. I think when you receive a dividend, it's a perfect opportunity just to take time out, check the stock, check the underlying performance of the stock, and really decide what you want to do with both the dividend that you've received and also the investment that you have within the company. So marketbeat.com is pretty much my favorite website in terms of free analysis of stocks. You can see we're looking at Duke Energy now. The current price is $84.60. There's some good information at the top of the page in terms of some general price information, in terms of looking at the price on different range criteria, but also share information in terms of volume, average volume, market capitalization, and also some high level financial metrics which I like to use. So P ratio 30.11, dividend yield 4.57, and beta of 0.27. But what I really like to look at when I receive a dividend to assess a stock is this beat the market rank chart. It's basically a 1 to 5 or 0 to 5 chart based on a number of parameters. So if you just go through, I like to start with dividend strength, which is the brown part of the visual. The reason I entered Duke Energy in the first place was for its dividend. It's good to see a dividend strength of 4.2 out of 5. So we can clearly see that Duke Energy is a leading dividend payer with a yield of 4.57%, which is very healthy, and it puts the dividend yield, it's within the top 25% of dividend paying stocks. Also impressive is the fact that Duke Energy has been increasing its dividend for 13 years. In terms of dividend coverage, the dividend payout ratio, which is the proportion of earnings paid out in dividend, is 76.28. Now, you could argue that is slightly too high and obviously beat the market beat, suggests that any payout ratios above 75% are not desirable because they may not be sustainable. However, when we look at dividend sustainability, next year's dividend payout ratio is predicted to be 73.66, so that gives me confidence that Duke Energy will be able to sustain their dividend. So that's extremely strong. If we just move on to the next part, this purple element, where Duke is only scoring 1 out of 5, this is to do with company ownership, and it's looking at insider buying and selling, and what proportion of the stocks are owned by insiders. It is suggesting that there's been more selling of stocks by insiders. You can see around $42,000 of stock have been sold by insiders in the last 3 months. However, only 0.11% of the stock is held by insiders, and we can see a very high proportion. Almost 64% of the stock is held by institutions, which Market Beat suggests is a signal of strong market trust in this company, which is a good indicator. However, overall company ownership is a low score out of 5. Moving on to earnings and valuation, which is an extremely important part of this equation, and you can see 0.6 out of 5 is extremely concerning to me. That said, earnings growth is expected to grow 3.6% in the coming year. The P ratio is high at 30.1 versus the market at 19.04, and also versus the sector at 21.17. So it's suggesting that the stock is expensive when compared to earnings versus the market and the sector. And the price to earnings growth ratio at 3.8 is also suggesting the company could be overvalued. That said, the price to book value per share is 1.34, and Market Beat suggests that a ratio below 3 indicates that the company is reasonably valued with respect to its assets and liabilities. So overall, some positives and negatives in here, but this is my key concern with this stock going forwards. In terms of analyst opinions, this is a little bit of a contradiction in my mind, in terms of the company is rated as having a upside of 10% from the current level. So analysts' consensus price target of 93.07, suggesting 10% upside from the current price. That gives me a little bit of a sort of question mark about the price earnings information that we've just seen. Is this consensus price target really achievable? And that's something we really need to think about. And then finally, a community rank. I'm not really going to go into that at the moment. We're going to shift across now to the spreadsheet. So just to say that information is available for all stocks in Market Beat, and I find that an extremely good place to start when deciding what to do with the stock. Then what I do in the spreadsheet is just plug in the key data. So for me, dividend yield 4.6 is good. Quick ratio, I'm concerned about. It's well below 1, where I'd like it to be. P ratio, as we've already seen, is high versus the market and the sector, suggesting the stock is slightly overvalued versus the market and the sector. I'm also concerned about net profit margins under pressure. I like to see margins at least above double digits. That's a concern. And as we've seen, we've got this slight anomaly almost of, is this target price really achievable? If I felt that it was achievable, I'd be more than happy to stay in this stock. As it is, because of the strength of the dividend, my decision here is going to be hold and price target, and also reinvest dividend. So what I'm going to do here is say, well, Okay, I've entered the market at 83.65. The analysts are suggesting there's upside of 10% from current price, say 9%. I'm going to target, let's say, 10% from my entry point. That pulls us to 92. I'm a little bit concerned. I'm getting a little bit greedy against that price that I'm not confident in. I'm going to reduce my expectation to 5%. Again, it's looking a bit ambitious from where I bought into the stock. But I'm going to go with it. I'm going to set a target of $87. I'll then go to the Revolut app, go into the stock. I'm going to set a price alert of $87, and that will alert me to trigger a sell. In the meantime, I'm going to reinvest the dividend. The dividend was only 48 cents, so I'm going to have to round it up to an investment of $1. I'm going to make that investment today. That'll go into the stock. I'll then just hold the stock, not pay too much attention to it. I'll track when the next dividend dates are, and then take it from there. So I hope that's been useful. That's the process I go through for every stock, every dividend that I received. I'm planning on doing some more examples of this just to talk through my thinking, because the beauty of getting into stocks is every stock is unique. Every stock requires a different analysis. I like to go through the same process, but depending on what the analysis brings out, it drives different decisions. So I'm hoping to do some more examples of this. If you like the video, please like it. If you've got any questions, please comment down below. And I'd love it if you could subscribe to the channel as well for more of this type of content. In the meantime, take care, and I'll speak to you soon.